The Singapore Exchange has posted its strongest year yet, with net profit hitting a new high. Shareholders are set for a bumper payout. Chok with a report.
In its latest financial year, the Singapore Exchange's adjusted net profit jumped nearly 25% to hit 759.5 million Singapore dollars. Growth was broad-based, mainly led by its stocks business. The exchange says shareholders will get a one-off additional dividend of 12.5 cents per share.
The cash equities business was a standout for us. That revenue increase was 28% year on year. So we saw the securities daily average value grow up. It's the highest in 18 years. And we saw broad-based investor interest in that from institutional and retail. Activity is very vibrant there.
2, 1, strike!
A pickup in market activity also helped boost its stronger performance. There were 21 new listings this year, 3 times more than the year before, and raising over 4 billion Singapore dollars. But the real test is whether this momentum continues. The exchange says it's expecting 50 IPOs in its upcoming pipeline, including companies from digital infrastructure to healthcare and consumer sectors. It's also planning to expand global partnerships through dual listings on the Global Listing Board.
A number of companies have started preparations towards a listing on the GLB. We would hope that translates into actual listings in the next while, let's say in the remainder of this year. But of course, timing around these things is always tricky. There's a lot of factors that play into that, market circumstances and other factors.
In its outlook, SGX expects growth to continue across all segments. It plans to upgrade its trading systems and expand into segments like gold and foreign exchange. Some analysts are also optimistic for sustained growth. They say market reforms have helped boost activity in the cash equities business. Continued geopolitical uncertainty is also expected to boost demand for products that help investors manage risk.
We are expecting SGX to see accelerating growth over the next few years, particularly driven by the fact that the equity engine, which hasn't really been performing for say a decade or so, starting to crank up, and I think the reforms as well as Singapore as a safe haven destination for capital and so on, all are helping. So I think that growth is structural.
SGX says it'll keep innovating across its existing businesses and invest in technology and AI. It wants to turn this year's momentum into lasting growth.
And for more analysis, I'm joined by Kenneth Goh, who's Director of Private Wealth Management at UOB Kay Hian. Kenneth, welcome to the show.
Thank you very much.
Now, first of all, we know SGX is saying that they're entering the next financial year from a position of strength. From an investor's standpoint, do you think this is a sign of market revival, or is it still too early to call?
It's, frankly speaking, a little bit early days right now. What you investors are looking at is both breadth and depth of the market right now. What is happening right now is that most of the the increases or activity right now is in the primary 30 STI companies right now. And it hasn't really spilled over into the smaller cap companies. So what you're seeing is that while the retail investor volume has actually increased about 155%, but it has to be seen to be sustainable for a little bit longer before it can be a longer term play.
Now, we know that MAS and SGX have put in place some measures in order to boost Singapore's stock market performance. Do you think the results that we're seeing is because of those measures? Is it bearing fruit?
The EQT measures by themselves are extremely useful as a signaling measure. However, there are two components here. One is that it allows fund houses to actually take my capital and invest into the stock market within Singapore itself. Second part is the research component from there. However, based on MAS own reports, only about 100 reports have been used and about $6,000 for each report. So that's not really a lot of money. But what it does is that it creates a signal effect and states that the local market is very important for investor confidence itself.
Now, the company has also highlighted new ecosystems like gold, for example.
Yes.
And that's been quite a major focus for investors recently. How much potential do you think Singapore has to build itself into a regional hub, not just for gold, but also other investment products related to it?
It's good that it's starting out right now because Hong Kong has already started in July already. And what has happened, right, is that it's really focusing on the plumbing part from there. So what has happened is that the custody and the clearance is very important. So the 3 local banks, as well as the 3 other banks, have actually signed up to be clearing members so far. So that is a signal that by the end of the year, hopefully things might improve from there. A little bit, it could be a bit faster though.
Well, also given the external pressures and some global uncertainties at the moment, what do you think can help to boost Singapore's stock market going forward?
Ultimately, it boils down to listings. Where a stock exchange exists to actually help create companies for investors to actually invest in. And as of this present moment of time, in Hong Kong itself, it's about 80 over listings in 6 months versus Singapore's one about 20 over. So in that sense, perhaps we could work in terms of having more promising companies in Singapore being listed on the Singapore Stock Exchange.
And as you mentioned Hong Kong as well, how does the SGX's growth compare then with other potential regional competitors?
As of this present moment of time, I think Singapore, it looks much ahead of the rest, but certainly relative to Hong Kong itself right now, especially on the gold side, especially on the listing side, that is an area that, especially on the listing side, as you saw in the previous commentary just now, that's an area I think SGX could do a lot better.
Now, Kenneth, before we go, we have to get your outlook for 2027. What do you think will happen in that time?
Earnings guidance by SGX is about 6 to 8%. One interesting measure is that you are going to see is that there's SDRs, which is what I call Singapore Depository Receipts, as well, where you have foreign companies actually listed on the Singapore Stock Exchange. However, at the end of the year, Nasdaq has already announced that they're going to do 23-hour trading, 5 days a week. So that presents a little bit of a challenge for SGX, especially as it looks to actually take on those companies that's trying to trade on Asian markets as well. So a little bit challenging because on the bigger companies, they are looking at about 2 billion and above. So that affects the kind of the mid cap, only the bigger caps are able to get a little bit more research and attention from there. So we have to see how it goes for the end of the year ahead.
Right. Kenneth, thank you so much for your analysis.
Thank
I've been
you.
speaking with Kenneth Goh, who is Director of Private Wealth Management at UOB Kay Hian.